Good morning. Welcome Beyond the SEAF model. I'm Jack Kosar. This is effective for the week of March 31st, 2025. Let's get started. SEAF signals for this week. We retain financials and healthcare, and we add consumer staples. Financials remains real strong here with a trading week of 1, and consumer staples kind of jumps in here at the second place with strong trading weeks in a tactical month, improving on its strategic quarter of 6. Healthcare remains, even though with a trading week of 10, with strong in the tactical month and trading week 2. We'll take a look at that rainbow chart in just a second. Other things key to note, strong reversal on energy with a trading week with 11 at the trading week. And technology remains the worst sector with overall ranking of 31, showing a little bit of life, but still not much with a ranking of 9 on the trading week. Looking into our heat map. Heat map is not trending much here. We have some green up here up at the top here, but we are a little bit jumbled. And, historically, when I look at this heat map, when I see these machinations working around and there's colors kind of bouncing all around the heat map, that tends to tell me we're at a bit of an inflection point, which means, we're due for a little bit of change. I never project out what I think is going to happen for the next particular week, so I can't tell you what the signals are going to be next week. But based on the data that we have, looking at this heat map, we're kind of all over the place. The other thing I want to kind of note is, as you can see here, we have a lot of light cells here. These light cells here are really close to 0. That tends to tell me that managers aren't overly convicted in any one particular area. So, where they're not overly defensively skewed, not overly positively skewed, but they're unsure. So we're seeing a lot of light flows here. I'm not seeing a ton of, especially almost no accumulation here in the strategic quarter. Financial showing real strength in terms of its inflows, and technology showing a lot of weakness in its outflows. But outside of that, not a lot of conviction over the course of the last quarter. A couple other things to note, like I said, healthcare taking with an outflow. This outflow it looks relatively red, but it was relative to it was negative 0.19 on the trading week. Energy was negative 0.22. We tend to look for those conviction bets at negative 0.4 or greater. Similar thing on the inflows for financials, 0.31 increase on the week. That's pretty strong. I like to see 0.4, but, still looking pretty good. And then seeing some life out of consumer discretionary. We're going to take a look at the rainbow chart in just a minute. Overall, flows on the week was down, negative 0.44 overall in the week. Now, to note that these numbers do not include Friday, as we don't have them yet, but overall, we're seeing negative on the flows. Today, market is down, and so just something to keep an eye on is that, we did not see a lot of strong outflows overall for the week, but we will update you next week on what Friday did. Going into our rainbow charts, financials looks really strong. We have a nice relative outperformance trend that started from looks like June or July of last year, really positive, and we're remaining positive. We're sitting in that upper favored. It is really allowing for this relative outperformance versus SPY to take off. Looking into consumer staples rocketed up into favored. Now, the other thing to note here is the weakness of the overall scores here outside of financials. So consumer staples on a strong trading week and a strong tactical month were able to shoot up, but 12 is not the super high score that we were looking for. We're obviously sitting here in lower favored. So just key thing to note, we had a nice relative outperformance run in consumer staples. A little bit of retracement bound to avoid, and now we're back up into favored. It'll be key to see what this does next week to see if we can sustain this, but consumer staples kind of screams a little bit defensive, so that kind of highlights that, this thing could be a sustained trend. If we can get up in this upper favored, we would need some continued flows. Consumer staples on the trading week was a 0.12%, which was not overly strong, but was strong enough to vault itself into the favored. That's partly due to the weakness of the other sectors, but again, something key to note. Looking into healthcare. Healthcare had a nice little run here in the relative outperformance. We had a bit of a sideways move there. Kind of came down to touch lower favored, almost into neutral. We'll see here if this is just a break after a nice little run up, or if this is going to continue a trend down to healthcare. Healthcare was rough much part of last year. It would be nice to see some stronger flows to sustain this upper favor and get us back into the get us back into the upper favored for really to get that strong relative outperformance. But overall, it's kind of a wait and see here, as it is a SEAF signal, and it is in the top three. I wanted to highlight a little bit on technology. Technology continues its downfall. We had a little bit of that sideways move that was highlighted by rapid moves from favored to avoid and then back into favored. We are now seeing a little bit more of a sustained move from technology, as we have a nice little bit of a downtrend in its relative performance versus SPY. Last but not least, I wanted to mention consumer discretionary. Consumer discretionary is our second worst ranking out of our entire 11 sector spiders, but we did see a little bit of a kiss up here with that trading week. We'll see if this could be sustained. But in order for this to really start to take off, we would need to see several weeks of sustained strong flows to get up into favored. So, nothing to bite on here for consumer discretionary. And as I've mentioned before, when we sit at pivot points in the market, it's really hard to take these trading weeks too seriously, especially for things that are sitting up at the bottom. We get these little machinations. The money flows in rapidly and flows out rapidly. We really do want to see more of a sustained trend over several time periods. And one trading week, while it can produce small bits of relative outperformance, it really doesn't give these long trends like we can see here from October to December of last year that produced a really nice long run of relative outperformance. These 1 week moves, they tend not to be strong enough. This last chart, I did show this chart last week, and I actually want to bring in my dad to kind of discuss it a little bit more. What we have here is the total net assets if you add all of them up for the 11 sector spiders. So I'm going to give it away to my dad.
This chart is really important this week because it represents adding all of the AUM from the 11 sector spiders together. It's essentially what you might see if you were looking at the AUM or the total net assets invested in SPY. This shows a little bit more detail, and it's a little bit more, I think it's going to be a little more incremental. I think it's going to be a little bit more sensitive. So the reason we're looking at this now is Jack had mentioned when you look at the heat map, all of the colors or most of the colors in the heat map are not bright colors. You're not seeing a lot of bright reds or bright greens, which means aggressive moves in or out of a given sector. Instead, they're all kind of pale. The reason for that is because, and again, we're not concerned with politics here. We are concerned with making money, but we do need to be aware of what's going on around us. And what's happened here over the past couple of months is the market is really uncertain of what to do here. There's different messages that are coming out of Washington. People aren't really sure if we're going to have tariffs, if this is just a tactic to get other countries to come to the table. The markets can handle bad news all day long. What they can't digest and what really hurts markets is uncertainty. Businesses are trying to plan a quarter or two ahead, and if they don't know what the policies are that are coming out of Washington, it makes it real hard for them to make investments. And when they do, they start to pull in their horns, rather than make an aggressive bet. You've seen a lot of sector rotation that's been really quick and kind of erratic, and you see that in those pale colors that we looked at for the heat map. What this is showing, going back to this chart, is that the collective AUM of all the 11 sector spiders dropped below its 200-day moving average. That's what we're looking at right here. I'm pointing to it. We came back up to the 200-day moving average, and now we're starting to roll over. Does this necessarily mean that we're going to go into a prolonged move down? No, but it does tell us that we're at a place where these AUMs are at an inflection point that will likely affect the direction of the S&P 500. If we go back here, this is March of 23. You can see that once we started, let's use this. This is May of 2023. May of 2023, we're hovering around that 200-day moving average. We started to move higher off of it. It was a nice bottom here for the market. Look what happened here. This was basically September, October of 2023. We dropped underneath the 200-day moving average, again, with the collective AUM of all 11 sector spiders. And we had a little dip down here where the SPY, the ETF for the S&P 500, fell below its 200-day moving average. Look how quickly it recovered, and we moved back above it, and that identified this as a major bottom. This, by the way, October of 22, I don't have October of 22, but we had a Michigan sentiment report that was out today. It was the lowest that it's been since November of 2022. The market bottomed in October of 2022. So the point I'm making here is this contraction of assets, when you add the 11 sector AUMs together, shows the market doesn't know what to do here. So it's pulling in its horns. It isn't making strong bets anywhere, and that is affecting the way this chart looks. However, if we can get this line here in the upper panel back up above the 200-day moving average, especially with the sentiment report coming out today that shows we're at 3-year lows in terms of the Michigan sentiment, consumer sentiment that is, this could turn into an opportunity to buy. But right now, this is screaming at us that managers, investors are pulling in their horns. They're still making bets, but they're making very short-term bets, and they're trying to move around the sector space to try to find something that sticks. So we'll be watching this chart closely in the weeks and months to come. And on any significant changes, you'll probably see me roll my chair in here again, and we'll talk about what the changes were and what they mean to the future direction of the market. That's all we have for you today. Have a good week, and we'll see you right here 1 week from today.